Trading the markets seems to be difficult nowadays because the prices are not going anywhere as it seems. Is this really true? Let's have a closer look at the markets, at the stock prices, of course, New York, the Asian markets and the German DAX. And additionally, I have a view on the energy market. So let's have a look at crude oil, for example, as well. So starting with the Dow Jones, we see that currently the prices are coming down a little bit. You can see it here in a 4-hourly chart. The last price movement is leading us to lower prices, which is not super surprisingly, as we have seen some strong price movement before. You can see this here from the highest point we had here in January, for example, at the beginning of the year. It was a quite strong movement to the downside and a more or less shaky movement to the upside. It was not super overlapping here. It was quite a tight thing. So for the Dow Jones, it's still both possible. In this case, this is a future price, the March contract in this case. And you can see that the price action is still allowing a continuation to the upside as a follow-up from that what we've seen here before. For having this, it might be a good indication to wait for this intermediate high, which is at 16th of February roughly. And you can see that the price here would give us an ABC pattern, which is a typical corrective pattern, and the possible continuation of what we've seen here before to higher levels, which can still lead us to higher grounds here and even to new all-time highs here, and leading us into the direction, not necessarily reaching, but I think there's a good chance, if we do so, that we will finally reach 37,000 for the Dow Jones future in this case. So the Dow Jones is not 100% set for lower prices currently. However, the latest price action leads us to lower prices. So is there a chance that we can have a continuation there as well? Yes, indeed. As long as the market is falling in a strong manner. So maybe giving us some corrective pattern to the upside, continued by some price action to the downside. You can see if you have a corrective pattern here, for example, it can be an ABC pattern. You have something like a trigger for selling short the market, as long as the market is not overshooting this February 16th intermediate high here, which is roughly at 35,000 with the future price. As long as you don't see something like this, it seems to be the better choice to stay on the short side and wait for some corrective pattern to the upside to sell short again. We are still in a possibility to reach this level here. Again, we have this 34,000 currently. We have a price level here at 33,000, and even below that, let's say 32,000, is not killing the bullish overall view we have seen here. Only when the market is going below these levels, you should expect even more to come, especially when we undershoot the high in August or in summer 2020. So not the worst picture currently with the Dow Jones, but it is maybe better to wait until we break this level here, maybe when the market is turning quite soon. But however, if the market is continuing here, I would not recommend to go long at that point. I would wait for continuation for lower prices first, entering this zone here again, and turning around later on. So I think we have a really, really nice chance, a really good chance to go long when the market is breaking here quite soon. Maybe you can give him additional, let's say 500 points here to the downside. But when the market is going too low, I would not try to buy anymore, because when we have a setback below the 78.6 Fibonacci level, you can see this is a typical box for a corrective pattern. And typically does not mean that it is not allowed to go lower. However, when the price is going below this level here, chances for a really strong movement to the upside are going down severely. So you have a raw probability curve which is roughly like this, and you can see the area here is not very big compared to the probability area above this level. So if the market is going below this level, which is namely currently at, I'm sorry, I cannot read my own numbers here because it's hidden. Okay, 33,600 roughly. Seeing the price level below that will even kill my idea of going long above this level. So as long as the market is staying above this level here and turning above this level, I think that we have a good chance that the market is continuing to see or to maybe finally reach to new all-time highs, but staying below that and going even below that level is definitely not helping for entering long positions at the very moment. I would expect that the market will undershoot this level as well, so it's better to stay out a little bit. Let's have a closer look at the S&P 500, also the future, the March contract, and you can roughly see it's the same situation. So my conclusion is roughly the same here. Some interesting level would be also here, the mid of February intermediate high you have here. It is a little bit below 4,500. Please, depending on the contract you want to trade, whether this is a future price, for example, or you have something like a CFD for European countries, or if you trade some other contracts or options, for example, then you have to check this out. But the intermediate high here, mid of February, is giving an indication for this one, and the, let's say, last line of defense could be something around here, 4,292 is not on the point exactly, but a level below this would indicate, no, it's not the perfect situation to enter a long position here at that point anymore. So we can take this away. This is just a remembrance level here. You can, of course, place an alarm here or set some alert when the market is going through this. Then this idea is not the very best. You should expect that the market will undershoot here and continue first to the downside before giving us new high or buying opportunities. What is about the Nasdaq? And the Nasdaq is looking worse, but in both directions. And that's the interesting part. We have seen some strong movement to the downside here, and we see some bullish action here, but you can see this setback and even this setback is overlapping, and you can see from that here we have had lower highs here and we had lower lows, so this is a downtrend. However, this is a weak downtrend, which is really typical a corrective pattern. So if down is a corrective pattern, whenever the corrective pattern is done, you should expect the counter movement. However, the movement before that, from here to here, was in an ABC shape pattern. And as I've mentioned before, ABC patterns are also corrective patterns. So what I would expect is we have a corrective pattern to the upside, this one, and we have a corrective pattern to the downside, this one. Even when breaking through this level, which is typically a trigger for the bull side, I would only expect something similar to this one, which was lead us to another three-wave pattern. So we can name this, for example, like a zigzag pattern here, sharply at the beginning, sharply at the end, to expect something similar here, maybe a little bit higher than this one, because in this situation, this part sometimes is a little bit longer. We call this one zigzag, two zigzag. It's a double zigzag, and double zigzags are quite common corrective patterns. However, this will overall mean that this is more or less something like a corrective pattern, which will lead us in the wake of the overall picture here to another low in later times. So you can see my drawing here. It's not the latest one. It's a few days old, but it did not change in any way. It's here in the weekly chart. You can see it is quite expectable that we can see some higher levels in the next weeks, the next few days. But even if so, it is highly expected that the market will continue to the downside, as the market here did not move really impulsively to the upside. So it is a high chance that this will happen. So if you're an aggressive trader, you may have a closer look here to sell short the market, or to wait for a setback through this latest low here. Don't sell short at this price. I would not recommend this, because we have a corrective pattern here already. If you're a shorter term trader, you should at least have a closer look. What is this giving us? Is this a strong movement, a weak movement here? You can, of course, wait for something at least to these levels here to have a continuation. And then it is decided whether the market can continue which is not my favorite picture because of the three-wave shape pattern at the very beginning, or turning around, which is what I more or less prefer. And I see it would be something really typical in a bigger picture as well. So I would expect that the market has a good chance that later on this year has a good chances to reach the 13,000 level here, the Nasdaq future in this case. So after coming down here like this part here, the latest part here, this is only, let's compare this one. That's the reason why I'm always using 4 charts. Some people are saying, yeah, please can you bring up a single chart only, which is not so much confusing. But you can see this all is overlapping, but this internal part here is not overlapping at all. You can see here that this one, a counter movement, this one, a counter movement, this one. So this is still in a strong way. So currently buying the market is not the best choice because we had a strong move to the downside. However, it is a 5-wave move already, and after 5 waves, we very often see some turning point. So I would not be surprised if the market is now coming up. And if this is in a strong movement, something like a 5-wave move here, giving us a corrective pattern here to the downside, I think we have a good week here buying for the next few days maybe, as soon as we see this one. So you can see it is constantly bound to some thing what has to happen before that. We need this strong movement before I can enter the the bull market here after this setback. If you don't get this, and I cannot see the future, I don't know whether this is coming up next, but if we don't get this, if we get something like this, definitely it's not a buy. As long as you see some shaky movement or something like an ABC pattern, you can see it. I can take it away. I drew it a little bit too big, but you can see this. A 3-wave pattern is never a bullish movement. There's a counter movement. If you break this one, you can have a corrective pattern as you can expect this to be a corrective pattern. On the other side, if you have several times back and forth, it's also a continuation into the other direction, in this case to the downside. So this is the overall picture and some ideas about the next few days. What about the broad market? The Russel 2000, which is representing the broad market in the US, 2,000 stocks inside, and not very much focused on the tech market. And you can see the broad market is coming up. But you can also see this is either an ABC pattern, and now we are in the next direction, or this will become an uptrend continuing to the upside. Then we have a lot of overlapping because these levels are below this one. So in either way, in both ways, this is definitely a corrective pattern. So I'm not super convinced to buy this market currently. Maybe interims or a short-term buying opportunity will occur or arise here when the market is giving us a strong movement, a shaky movement here on an intraday base, maybe on an hourly chart or 15-minute chart. Of course you can do this, but only on these lower time frames, because the overall pattern here does not look really satisfying for a bullish market participants normally. Okay, so before turning to the Asian market, let's switch to the German DAX, because the German DAX is in a quite interesting situation currently. You can see that we still did not reach our preferred area here, which is below this level here from October last year. And I would like to see that the market is going here, not to harass anyone who is currently in a bullish position or has some stocks in the portfolio. It is more or less because this is easing the chance for the bulls again, that some market participants are willing to come back to the market, because this chart technical pattern reaching this level would be really nice. You see this line as well, so you can see it's not 100% sure. I'm not 100% sure. How could I? that the market will hold here, but we have a good chance. Currently, it's not a good position to start with the bull market. And that's what we see here on a 4-hourly chart, for example. I thought a little bit. This one is quite strong here. And I thought when the market is coming down in an ABC or corrective shaped pattern, I definitely would like to see something like this again, and I would switch to the buy side. But you could easily see we did not get anything in a corrective manner. And even if you say, yeah, isn't it corrective? Let's see it on a lower time frame. You can see strong movement here, a counter movement here. They are not overlapping. I can take this away. So you can see this does not look like a corrective pattern, first. The second is we have constantly falling highs, never triggered. There was no chance for this bullish idea. So at that very moment, I thought, wow, this is a nice thing. If the market is coming down in a corrective way, we can buy this market. And you could see the market did not give us the opportunity, but it was an honest market situation because the market did not even pretended to be in a corrective pattern. It seems to be a strong movement to the downside. So what I think is, if the market in the next few days, Monday, Tuesday, whenever, is giving us some corrective pattern to the upside, I think we still have the opportunity to sell short this market and finally reach this area here, which is roughly, it is below the October low, which is roughly 14,800, and reaches down to 14,250-ish, something around this one. Not exactly this level. It's just a comparison here, this green line to this corrective pattern. Can be a little bit less, it can be a little bit more. Everything is okay, but what I don't want to see is a breakthrough this level, because this would definitely open a high chance that we even break this level here, which can happen, but is not due because of what we've seen here so far. Currently, I would not estimate that this is the best chance that we see something really strong, because the overall pattern here to the downside is also looking corrective, which is giving us the opportunity to go a little bit lower. But normally, if the market is really heading to this area here, I would expect some more strength to the downside. And what we see here from these levels here, this is too much looking corrective to convince me now, at least, to reach these levels. So I would not overdo or overestimate the situation that the market is reaching levels of 8,000 and even below. So what about the Asian markets? Let's switch to the Nikkei 225. And the Nikkei 225 did a quite good job the last few days. We have seen a strong movement to the upside. That's a good part. Something not super corrective looking to the downside. So keep in mind, an ABC pattern is giving me a good opportunity to buy the bullish side again. However, this market is not looking perfect. I think the Japanese market cannot easily be traded here on the bull side, because we still have lower highs, but not lower lows. So it is not necessarily given that this trading situation should be seen like this. There's another thing I sometimes like to see. This is that we have a pattern like this here, which is a typical corrective flat pattern, a sideways correction, because this seems to be a one mover, perfect. And then we have an ABC pattern here like this, which is really typical as a corrective pattern. And from these levels on, we may have a chance to continue to the upside. But to be honest, I'm not super convinced that this will happen. In case the market is breaking this level, you can maybe trade this one and say my risk is quite limited, because I can place my stop below these levels here. I can name this, the high here is 27,485 points. This is a Nikkei index, it's not the future in this case. And the lowest point here is 26,713, roughly. Please check it back on your own chart, depending on the contract you are trading. But these levels, or if you don't want to wait for this one, you can, if triggered here, of course, place the stop at the 78% Fibonacci level, which is roughly, please check it back by your own. I don't want to take away the joy of drawing all these things, which is roughly 900 in this case is a possible stop if the market is going here. So maybe you will have a good risk reward ratio here. If the market is really going upside, then it's a good chance to enter and you have a limited risk. So it is maybe worth a try doing this, but the chances that this occurs is not super high, especially as the Nikkei is not moving against the broad market or the US market, for example. It is more or less similar, not exactly the same price pattern, but a little bit similar. So if the US market is still stuck in a sideways or in a down movement, then I don't think that the Nikkei has the best opportunity to go upside. What about the Hang Seng, the Hong Kong index? The Hong Kong index is going to the upside, so this is a good news on this one. I think it's not the worst situation in the first glance. However, if you have a closer look, this was the lowest point here, which we've seen in mid of December. And all the setbacks here, they have some kind of overlapping. So I'm not super convinced here that this market is turning already. So in this case, also the Hong Kong index is not convincing me to buy currently. So you can see that most stock markets, not to be honest, nearly all of the stock markets we were talking about, and this is the Shanghai Composite index, so the Chinese mainland index, you can see that even this market is not giving us a good trading idea because we have overlappings here as well. So most of the stock markets globally are giving us an indication. We are not sure what to do. We have to wait a little bit longer before we can see what is happening. If you're a short-term trader, I gave you some ideas how to enter the market. If you're a long-term trader, I would recommend to wait a little bit longer because currently it is maybe at the turning point. Whether this is a corrective pattern, which is coming to an end in some markets, maybe soon, in other markets not directly, or is it something opening up to the south to way lower levels than we've seen before? Way more interesting is currently the energy market. And the energy market is constantly reaching higher highs. And this is really a nice situation for the bullish people here. And what you see here currently is I drew here the opportunity that we have some like a corrective pattern. And it seems that we are currently in some. And after this, we need to have some continuation, maybe to this level. This is just an educated guess. It can be higher like this one. It's just from the first part here, maybe at the end of this corrective pattern, we will see something in a similar price scale. We can redraw these lines here as soon as we saw the market is continuing. Then we can guess how long it is going to the upside. However, what we see here, the current movement here on a daily chart, if you close in a little bit on the 4-hourly chart, you can see this part here. Does it look impulsive? Does it look corrective? Keep in mind, if you have something like an ABC pattern, then it is corrective. Or if it's not an ABC, if it's overlapping, it is corrective. So what I see here is either an ABC pattern, depending on how to draw the line. But even if you think, no, I would not draw it like this, I would draw it like this. Also very nice. But you have also a corrective pattern because this one and this one were overlapping. So the overall pattern here looks corrective. So I think the better chances are that we are still in a corrective pattern. And at the end of the corrective pattern, we will have the continuation. Maybe it's the same I've drawn here. So we have a continuation to reach $100 for the crude oil future. This is CL. You can also trade WTI, which is the same. This is the contract here, or QM, which is the mini future contract here. The idea is roughly exactly not roughly, it's exactly the same. It's only different contracts to trade this. So you can see this is a really corrective one. And if you want to trade the market long, you can maybe enter the market at that point. This is something, a typical trigger for a continuing up market, which is leading us, I would say, minimum to, let's say, $96 per barrel, and with chances to even reach 100 or even a little bit higher to see a continuation like this. So I would expect that the market has a good chance when we overshoot these levels here to reach higher levels. If you're a shorter term trader and you're willing to see or to follow the lower time frames, you can also see maybe this one can outcome like a 5-wave pattern, and the next corrective pattern you can have here can lead us to an even lower entry point, something like this. So you don't have to wait for this one. This one is exactly the same I've drawn here. And if you don't want to wait for this one here, you can, of course, wait for a pattern something like this. This is just a suggestion, but if you see something like this, then you have a good chance to enter the market. It can also be an ABC, but the idea is exactly the same behind that. If you have a corrective pattern here, overshooting over the trigger here, it's a good opportunity to buy this market. So it's maybe not the best choice to go into the stock market currently. It's no need to sell all your positions. Of course, there's a risk of a lower prices now. If you want to keep the positions a little bit longer, it's okay. But it's not the time to re-enter the market. It might be the time for natural gas. To be honest, it's a little bit different like I expected. Well, expected is not the right word. Like I've normally wished for. Maybe you remember that in the near past, I saw something like this, and I said, if we have something like an ABC pattern, I definitely want to sell short the market when the market is breaking through this level, because this is really natural. But what we got is completely different. We did not get anything like this. We got a strong movement to the upside. So not a shaky ABC pattern. However, now on a lower time frame, we see the next chance that we get something like this. And this is giving us an opportunity to enter the bull market here, or the natural gas long position, when we see something like this ABC pattern breaking through this level. So you see, I'm constantly changing my idea. I'm not sticking with, yeah, I said this yesterday. I'm not interested in what I said yesterday. I'm always trading what the market is giving us. And if we see strong movements and an ABC pattern, continuation is really typical. So if I have a strong movement and this ABC pattern here on this side, it would be a perfect idea to buy the market to at least see something like this, and it may become something even more, but this will be decided here whether the market will turn or continue. But at least this movement here is something I want to trade and I want to take with me, compared to this loss, which is possible. It's a really rock solid trading idea because my risk reward ratio is positive and I don't have to fear too much. So that's it for my part. These are some ideas for the current market situation. So I hope this is helping you. Of course, you can apply all these ideas to your own beloved market. So if you have a different market, you want to have an eye on it, you of course can do it by yourself. Just check where's the strong movement, where's the weak, the shaky, the ABC movement. That's normally the counter movement, and you can trade after, and that's really important, after to get some trigger. You need to be triggered, in my eyes at least, otherwise you are catching a falling knife, for example. It's just jumping into a direction which is not currently occurring. So it's really nice to see that the market is doing the first job to turn around. And if you don't want to wait too long to see that the market is overshooting the trigger line, you can try to find the same situation on a lower time frame. The situation is fractal, so you can see this on many time scales, whether you're a long-term trader, short-term trader, or maybe an intraday hardcore trader in lowest time frames. It should work on all of this. So have a good time, crossing my fingers for you. All my best wishes. See you soon.